All right, welcome everyone to our monthly Apple Corps of Dallas main meeting, January 14th, 2023, first meeting of the new year. Today we've got Cassandra Houlihan, a tax expert, giving us a good Q&A presentation on taxes. We've got the tax season coming up. And, frankly, I'm surprised she's able to do this because things are ramping up quickly for tax season this year. So we really appreciate the time that she's willing to give us to answer our questions. So Cassandra, I'll let you take it from here.
Well, I appreciate you inviting me to be here. And we've got a couple of more weeks that'll be slow just because the 1099 W-2s aren't out yet. So starting February 1st, it's going to get pretty crazy. But I really appreciate the opportunity to be here. So let's see, Richard, you're the one that fired off most of the questions.
Forwarded a bunch of questions from Taylor on organizational, type issues, and then a few from some other members, yes.
Okay, well, I only got like one list. So I'm sorry, Taylor was the one I got it, but it was okay. It was forwarded. So I think Taylor's the one that sent most of the questions. So I'm going to kind of read his question and then answer that. And then you can ask more questions if you want more in depth.
Knowing this group, there probably will be a few more questions today.
Okay,
yes.
okay. Well, let's see. Taylor's first question was, if I make a contribution to the Apple Corps of Dallas with no strings attached and not for any services, can I deduct it? Actually, you can go online, and with so many organizations out there now, you can check, it's called Publication 78 data, and it lists like all the tax exempt organizations all over the United States. And the Apple Corps of Dallas is on there. You can print off information, their tax ID number, when they were established. They're tax exempt under section 509A2, which makes the membership dues deductible to the organization. Does that answer? Okay.
Perfect.
Okay, and then the second question was, if I paid the Apple Corps of Dallas $50 for a dinner or other service that I received, can I deduct that payment? Okay, that's kind of a yes and no. If you paid them $50 for a dinner, you got dinner and the dinner was worth $50, then no, you can't deduct it because all you did is pay what it was worth. Now, if the dinner was only worth $10 and you paid them $50, then you could deduct the $40 difference.
Would you need a receipt showing that it was only a $10 meal?
That wouldn't hurt at all. I mean, of course, I'm sorry.
I have noticed starting this last year, more and more of these dinners I go to now will, in their little advertisement thing, will separate out meal has value of whatever. So they're getting better at not making you have to make the call on that. So but in the past, it used to be you just had to make a judgment call. But I'm seeing more and more nonprofits are doing that in their kind of due diligence to help out the county.
And right, and that receipt always helps.
Yes.
I guess you could also take a picture of the menu and what they sold it for and what you ate. So just as long as you have some backup, and it's less than $250, the IRS is pretty lenient. If it's over $250, you better have a receipt. Okay. If I make a contribution to the Apple Corps of Dallas, but say it can only be used for a certain event, can I deduct that contribution? And this is more or less, okay, like, let's say donating to your church. I mean, you can donate to the church and say, this is totally to be used in the building fund, or this is totally to be used to, this particular function. As long as it has to do with your tax exempt purpose, then you can put stipulations on it. The only problem you might have is if they didn't use it for that and you ask them to return your money, then at that point, it's non-deductible. Okay. If I make a contribution on December 30th, 22, but the Apple Corps of Dallas doesn't get it and deposit it until 23, which year can I deduct it? Okay, that's either going to be the date mailed, which if you mailed it in 22, you could deduct it in 22, or the date delivered. So if you delivered it to them in 22, you could still deduct it in 22. But if you did not deliver the money until 23, then it's not deductible until 23.
So quick question on that one.
Uh-huh.
Are you saying it's the earlier of the two dates or the later of the two dates?
The earlier, either, okay, if you mailed it or delivered it in 22, that's when you get to take the deduction. Because you'll see at the end of the year, a lot of churches, they'll get tons of mail that's, mailed on December 22. But they're really good on making sure the mail date is which year they recorded in.
Thank you.
Okay. If the Apple Corps of Dallas pays me for giving a presentation, do I count that as income? That is a yes. If you are paid, then yes, you're going to pick it up as income.
Simple as that.
Do what?
Simple as that.
Yeah.
So I
Is income.
I do have some follow-on questions about that then.
Okay.
Because in the past, what I've done as program director is I have paid presenters that are from out of town their airfare, their hotel, a meal while they're here, and an honorarium, $100 or whatever, $150. So those four things, airfare, hotel, meal, and honorarium, are all of those considered income?
Well, basically, what that person would do, let's say this totaled $1,000, okay, and his costs were $900. Then the net, he would only pick up the actual fee that he was paid for the presentation.
Okay.
The 100.
Seems like.
And it's something that I've, as the Apple Corps of Dallas program person, I've never tracked any of that stuff. I just give the money to the presenter. So it's on them to keep track of that.
Right. Exactly.
I don't have to provide a 1099 or a 1095.
Actually, the organization does at the end of the year, but that's what I do as the treasurer. I'm to keep track of any, is it $600 is the limit?
Right, $600 for a 1099.
Right. So anything over $600, I, as the treasurer, have to send out, a 1099 miscellaneous or whatever and so that's one of the things I have to do this month. Fortunately, we don't have anybody we paid that much money this year, but
Right.
Yes, we do have to do that.
Taylor, may I ask a question about that? Do you submit one 1099 for the amount the organization spend, or must you itemize for each one, for each occurrence?
Well,
Okay.
you send each entity just one.
No, okay. But then the government gets copies of each one of those individually. Is that correct?
No, you don't send separate ones. You just send them one 1099 miscellaneous.
You send the person who received the money, but do you not have to turn in a copy of that to IRS as well at the end of the year?
Yes, you do.
Okay, so do you turn in the same individual copies that you send to different people?
Yes, you're required to do that.
Okay,
It's kind of like filing taxes. It's same as filing W-2s. If you run a business, if you give someone a W-2, you also have to file it with the government. It's usually done electronically, I use a webpage called 1099.org, and it's literally like $4 to do one. I mean, I've done them for ACD, and I don't even bother charging ACD the $4 because it's so little money to even worry about.
All right, thank you.
What if I perform a service for the Apple Corps of Dallas for free? Bookkeeping, audit, consultation, being the treasurer, and the Apple Corps does not pay for it. Can I count that as a contribution? And people, this is one of the questions that people really get upset about the answer. Okay. You can deduct anything that an expense that you're actually out of pocket for. If you don't pick up income for these services, you can't deduct the value of the services because you never picked it up in income. If you were able to deduct it, you would be getting a double deduction. And people get really upset about that. I mean, you can deduct your expenses. You can deduct 14 cents a mile for all your travel for a charitable organization, your out-of-pocket costs, all that. But if you don't pick up income for your time, you can't take a deduction for what you should have been paid. Is that making sense?
Now, that's why I asked the question, because I know a lot of people don't understand that.
There, you're right there.
And actually get angry about it. So, yeah. So it's like President Trump didn't take a salary. So, yeah, he can't deduct all that salary as a contribution, to the federal government. Okay. If I buy food for the Apple Corps without reimbursement, can I write it off as a contribution? What documentation would I need? Yeah, anything that has to do with money that you actually are out of pocket for, that you are helping a charitable organization. As long as you have the receipts, purpose, place, time, what it was for, that it was for the Apple Corps, then yes, that is considered a contribution. If the Apple Corps of Dallas holds a raffle and I win something, software, computer, do I have to include the value of that item in income? And that is a yes. You can deduct whatever you paid for the raffle ticket from that value. But yes, that's definitely income, and they are going to 1099 you, and they're probably going to withhold 20%. And that causes a lot of people problems, because here's this computer. Well, you need to give me $200 because I've got to send in withholding to the government.
So
The other end of
follow
it,
on to that.
I'm sorry.
Can I ask a follow-on question?
Sure.
So in the past, we've done things like drawings. I wouldn't call them raffles because we don't sell the tickets, but just within our own group, we'll pass out these tickets, at the start of meetings, and people win things of varying amounts, varying values. So that's what you're talking about, right?
Yes, I mean, this is similar, okay? In real life, does somebody pick up, this mouse I won as income? I mean, it really is, you won a prize. It is supposed to be taxable.
Mm-hmm.
But
And the fact that we're a nonprofit organization doesn't have any bearing on that?
No, I mean,
Honestly, when
honestly,
I win lotto, I have to pay taxes.
1.5 billion.
Okay, one more question, please. If the Apple Corps is given a free subscription to software that normally would have a retail value of, let's say, $200, but we were given this subscription by the manufacturer for nothing, and we give that away, what is that?
I'll kind of have to think on that one. I mean, it's,
Because, these companies will do promotional giveaways,
Right.
and, all we do is ask them, are you willing to give us some free software for a giveaway for our club? And a lot of times they say, yes, here it is. So we'll hold a drawing and you get this software that normally costs, a couple $100.
it's
Well,
probably
the
gonna fall under-
IRS,
Yeah.
IRS is still going to probably ask, what's the fair market value? That's what they'll probably always go back to. It's hard to say what the fair market value is your question more than anything. But I mean, that's what IRS is going to probably say.
Bye.
Hello?
We on? Here.
Oh,
Yeah.
I thought somebody else was getting ready to talk.
No, thank you.
Okay, so if I want to include the Apple Core Dallas in my will, is there anything I need to know about the provision regarding income tax? That's probably more or less a legal question because I mean, it just needs to be in your will. Your attorney could probably tell you how to structure it. Your estate may not need the deduction. In that case, there's a lot of workarounds. Maybe you'd rather the other beneficiaries make the contribution just so they get a deduction for it. That's a very complicated question when you start discussing estate planning. And I'm probably not qualified to tell you exactly what to do. If your estate plan is not large enough, I know when my parents passed away, they wanted specific bequests to certain organizations, but we got much more of benefit if the children gave it away versus the estate. And I think that's all of Taylor's questions.
Good job, Taylor.
Bernie threw a few on me last night, so these just probably had to do with the tax deductions for the cost of volunteering. And I think I kind of went over that, the 14 cents a mile for your vehicle. Just the money that you're out of pocket is definitely a tax deduction. Of course, with these new higher standard deductions, people itemizing contributions is, our firm has seen like a quarter less people actually able to itemize when, your standard deduction is $29,000 for a married couple. But yeah, I mean, it's definitely your out-of-pocket expenses are definitely a contribution. And then if it's actually your work, your W-2 work or your contract labor work, the mileage rate goes up to like 58 to 62 cents per mile. And it's the same there. You're able to deduct it if you're a contract labor person, yes. If you're a W-2 person, you're just out of luck because your employee business expenses are no longer deductible. And then also the home office kind of falls under the same scenario. If you're a W-2 employee, that deduction's just gone. If you're contract labor, then yes, you are able to deduct like the square footage of your office compared to your entire house, all the expenses, but that area has to be totally for your business. It's not like you can use your dining room table and say it's your office and then eat there too. So
Would that change when you retire? Because you no longer be a W-2.
yeah, I mean, if you have other income coming in where you're 1099, you can definitely deduct your expenses against that.
Okay. I mean, if you're like a retired teacher, then you're getting a pension from the state.
Yeah, you can't offset only earned income. You can only offset those expenses against the earned income.
Okay.
Not to get pensions.
Now, if you have, for example, myself, my wife died And so therefore I've had to pay taxes on both the estate and also for myself. Now, the first year she died, I got to still claim her. But now I've got to do it individually and also on the estate. And it's about to go into a trust. So I'll still have to pay taxes on, as I understand it, on both myself and on the trust. Is that correct?
Yes. If the let's say if the trusts are set up for your children possibly, or
Set up for
is this
me.
all set up for you? Okay.
We have no
You're
children.
gonna pay taxes at the trust level, unless the trust makes the distribution to you, then it flows through to you unless it's a capital gain. But yes, you'll pay tax on any income that remains in the trust, and then any income that's distributed out to you also.
Okay.
I got a question for you.
Okay.
I either have somebody do my taxes or I use TurboTax. And with TurboTax, they just fill out the info, put up all the information that they asked for and pay back. And then they'll tell me how much I owe or how much I get back. But the question I want to know is, because it always asks me to put my property tax that I've paid into the TurboTax, but do I get any benefit for paying my property tax? Well, besides living in my house.
Okay, your property tax, your taxes, if you're able to itemize deductions, your property taxes and sales tax, you're limited maximum $10,000 a year. Okay, if you're married, your standard deduction is like $26,000. Okay, so if your property taxes and your contributions and medical expenses over 7% of your income, if they don't total more than this $26,000, then you're getting no benefit of the property taxes. What a lot of people do is bunch. They'll pay their property taxes in January and December, hoping to get, it depends. Yeah, $10,000 is a lot of tax, but okay. So if you double up and you can get to the 10,000, and then they do the same on contributions, make contributions in January for the prior year and then all year long. I mean, that $25,000 is a pretty big number if you're retired now, that you're actually contributing and property taxes.
Thank you very much.
I have a question. If you have a child, an adult child who moves back in with you and has no income other than Texas unemployment income, can you claim them as a dependent?
Okay.
And I know I'm tossing this at you.
$4,000 is pretty much if the child is past college age and makes more than $4,000, then you're probably looking at no.
So does the Texas unemployment income count towards that $4,000 a year?
Yes, because it is taxable. Unemployment income is taxable.
Okay.
Well, it is this year. Now in COVID years, I think you got 10,000 free, but it was still considered support.
Mm-hmm.
So, all the details, I mean, it's possible you could go through the scenario and somewhere come out that you might could claim the person, but the $4,000 is pretty
Mm-hmm. Yeah.
standard. So,
Okay.
I have a question on trust. If I had a trust from my dad and left the money in the trust, never took any money out of the trust, but I can take the money out at any time, is that bank supposed to be issuing a 1099, or are they supposed to be filing taxes for that trust, even though it's my dad's died, passed away, and I And the trust was put in my name, but it's not really a trust because the money is available to take out. I don't know if you can answer that question or not, but it's a concerning question for me.
It's honestly, you just have to know what type of trust it is. That's going to be the starting point. Somebody somewhere's got to be paying tax on what the trust is making. So
I pay taxes through a K-1.
okay,
The
so
trust is filing the taxes himself and charging me $400 for it
okay,
and sends me a K-1. But I understood from talking to another trust company that they should have been sending me a 1099 instead of filing my taxes and charging me. Like a bank, if you had a CD in a bank, you know, you get a 1099 at the end of the year.
right.
So this has been going on for 25 years. So there's a lot of tax revenue that's been paid that probably shouldn't have. That's what I'm trying to figure out.
Okay, so it sounds like to me that you might just have a simple trust, and what's happening is the K-1 is flowing all income to you personally. So the trust is paying the tax, or you are paying the tax on all the income every single year, even though you're not taking it out, but you could take it out. So it sounds like I say, it's a simple trust, which just makes all income taxable to you, and there's no tax paid at the trust level.
Well, should they be doing a 1099?
No, not if you're getting the trust would be getting the 1099, and then the K-1 flows all the income to you. Is what it's sounding like to me.
Okay. Thanks.
Okay, you're welcome.
Cassandra, are you familiar with the change that was supposed to be made for reporting income greater than $600 a year from organizations like PayPal and eBay and things like that? And are they putting that on hold? Do you know anything about that?
The way I understand it, they are, because it's just the paperwork has got to be so massive on, and you know, the Zelle. Okay, if I Zelle Bernie, are we going to 1099 him for me just transferring him some money? I think that's the whole thing. I understand it is put on hold, at least for another year, because they just can't figure out how to do it.
So you think it'll be year to year on deciding whether to keep that on hold?
Yeah, I think it will be, and I can't even see them figuring it out for another whole year. You mark, okay, is this business or personal? Okay, well, if it's really business, are these people really going to be marking this as business?
I'm thinking they're going to do a lot like the 1099 stuff, where they say if it's if you pay with credit card, since the credit card system has it recorded, you don't have to 1099 people if you use the credit card, because the government has access to all those credit card information by subpoena anyway, or warrant. So it's not like, you know, in other circumstances where you got cash and things like that, there's no other transaction information about the transaction other than from the person. But the government has other ways to get it. And I'm hoping they're going just to say, hey, long as we require these companies, because they fall under banking, to keep track of all these records, that information exists if the government needs to get at it. It's not like, you know, cash transactions that the information doesn't exist.
Right. And I think that's what they figured out. We're going to have all this double reporting, and yeah, that's going to be a nightmare when everybody gets a letter.
Yeah. Thank you.
I like to shift gears a little bit, and if I'm out of the purview of this discussion, just tell me. We have a revocable family living trust with all our major personal property and real property in the name of the trust. A couple of years ago, I opened a little checking account at a different bank, and it was to be temporary. And I decided, well, I'm not going to use that money for anything else. I'll just keep this little checking account over here open. So we were going to go and add my wife's name to the account and put it under our family trust. And we were told we had to have an IEN number, which was not a condition of the trust when we established it. Is that true? Must we get an IEN number in order to add people to our property to the trust now when we didn't before?
I honestly can't answer that. Having a EIN number for a revocable trust in the past has not been required, because then the IRS is just looking for another tax return. There is no other taxpayer. You might just triple check with the bank. I think they're just causing some issues that
That's what we thought, but they were pretty adamant about it, and I was unhappy about it. So we just kind of walked out and said, okay, we'll just leave it like it is.
Okay. And I know some people, because of the banks, I mean, they are forcing them to. It just, another EIN number out there that you have to respond to. This is an irrevocable trust.
Okay, thank you.
Yeah.
Gary had a question.
Yeah, I think Gary Clark, did you have a question?
Good morning, David. Now that I'm almost as old as Taylor Sharp, I'm starting to receive required minimum distributions from multiple IRAs. And my question is there is it a total distribution amount that breaks the plane there, or is each one of those accounts separate and based on their own value? My reason for asking is I have one account that we're actually withdrawing from and making more on the withdrawals than the minimum is required. But then I have some other IRAs that are still sending out the RMDs, and I don't need that. I don't know what to do with it. Should I tell them not to do it, or how do I control that?
You just need to let them know the required minimum distribution is your balance at December 31st, the fair market value of all your IRA accounts added together, divided by the life expectancy tables by the IRS. As long as you take that amount, even if you take it out of one IRA account, you have met your required minimum distribution. So there will be no penalties. And as you are talking about IRAs, here's another great tax planning tip for contributions. If you're over 72 years old, you can have part of your IRA distributions made directly to a charity. You do not pay income tax on it. And that it counts as part of your required minimum distribution, which with this new standard deduction, that is like a wonderful way to give contributions and still get 100% of your standard deduction. But of course, you do have to be over 72 years old to do that.
Okay, great, thank you.
That's a great idea.
Is that 72 and older or 73?
72 and older.
Okay.
I can just give testimony to what she says. We've been doing that for several years. We pay our entire required minimum distribution directly into our church. It does not go through us. It goes directly from the IRA to the church. We get full deductibility, and that's the only way we can get deductibility.
Right.
And it works terrifically.
Same here. I do that too every year.
Saves us a lot of tax liability.
Is that true if you, let's see, I forgot what I was going to say, but if you're not deducting using the standard deduction, that would still be true?
Yes. In fact, that's the beauty of it. You don't have to pick up that money as income, and you still get your full standard deduction. So
Anyone else?
Yeah, it's Myron. Two things. Number one, on that, if you give out of your IRA to directly to the charity, it's a win-win for both you and the charity. So if you think about it, if you have $5,000 you're going to give to charities doesn't have to be one. If you do it the old-fashioned way, where you don't do it out of the IRA, you're going to pay taxes on the five, so it leaves you a lesser amount. So if you give the five directly out of the IRA, the charities benefit by getting that full amount, and you're not paying any taxes. So it's a win-win situation, period. But I did have a question follow-up, and that is, earlier you mentioned if you buy a raffle ticket and you win, then you can deduct the cost of the ticket. What if you buy 5 tickets? Can you deduct only the cost of the one ticket, the pro rata cost of one?
You can deduct the cost of whatever it cost you to enter that one raffle. So if you bought 10 tickets, you can deduct the cost of those 10, yes.
I got it. Thank you very much.
I got a question on that. Let's say your distribution that you had to do was $5,000 out of your IRA because you've passed that age. Now, I could give the $5,000 to a charity organization, or I could take that $5,000 and spend it back into something else, and all I have to do is pay taxes on that $5,000, right?
Yes, if you withdraw it, you will pay taxes on it, yes.
But just on the $5,000. But if I give the whole $5,000 to somebody, let's say taxes is, I don't care, 35%. Let's say that, I'm just saying, whatever. So in other words, you either pay 35% to the IRS or give the whole $5,000 to the church, right?
Right.
Okay.
Correct. Then you would, and of course you don't have to give the whole 5,000. Let's just say you wanted to keep 3, you'll pay tax on the 3, and you can give 2 to the church. It's just
fantastic.
You don't transfer directly to, and it has to be a direct transfer. You can't touch the money.
Gotcha. Thank you very much.
All right, well, very good. Unless anyone has any other questions, I think this has been a great learning experience for a lot of us, things I didn't understand. Larry looks like has maybe one more.
I don't want to hog the group, but and it may not be a question you can answer, but if you've got a S corporation and you keep putting money into it because you're spending money on development and you don't make a profit, can you still deduct the expenses for that S corporation during the year? And you keep putting capital money into the corporation, but you're not making any income. Can that go on for a few years?
Okay. Development, I'm not sure what kind of development we're talking about, whether it's an expense write-off or not, or has to be capitalized. But as long as you have basis in your S corporation, because, okay, let's just say it's losing money, but it owes you personally the money back, then you can take the losses. If it's borrowing money from the bank, you have no basis in it, so you couldn't take the losses. But these development expenses that you're talking about, they'd have to be non-capital items. I mean, you couldn't just buy some land and all that has to be capitalized, so you don't get an expense write-off anyway.
Yeah, these would be non-capital expenses.
Okay.
Okay, very good. Well, once again, Cassandra, thank you for your time and your expertise.
Yes, thank you.
And hopefully we didn't overwhelm you too much with questions.
I've enjoyed being here, so I will join you again, and hopefully, well, The tax laws are not going to get less confusing, that is for sure. But I really appreciate you asking me to be here.
Okay, thank you very much.
Thank you.
Taylor, you can stop that recording, please.